You're listening to the MarketGems Podcast, presented by the Chesapeake Group. Welcome to the MarketGems Podcast, presented by the Chesapeake Group. My guest today from DMG Blockchain Solutions, Inc., CEO Sheldon Bennett and COO Steve Eliscu. DMG Blockchain Solutions, Inc. trades on the Canadian Venture Exchange under the ticker symbol DMGI. DMG is an environmentally friendly, vertically integrated blockchain and data center technology company that manages, operates, and develops end-to-end digital solutions to monetize the blockchain ecosystem. Their sustainable businesses are segmented into two business lines under the Core and Core Plus strategies and unified through DMG's vertical integration. So here are some touchstones for today's conversation. The recent Bitcoin halvening and its ramifications for DMG, the company's software and related services known as Core Plus, and the utilization of AI as it pertains to future expansion. Sheldon, Stephen, thank you so much for joining me on the MGP.
Thank you for having us, Matthew.
You got it. So jumping right in, we just had the Bitcoin halvening event a couple weeks ago. So tell us, what was your strategy as Bitcoin miners to deal with the fact that your revenue was just cut in half?
That's a great question. I'll let Stephen talk about the particulars, but I think it's important for people listening to understand that Stephen and I have been in Bitcoin for close to a decade now. This is not our first halvening. I think you could say this is our third halvening. And we've seen many roller coaster ups and downs with Bitcoin volatility, not just the halvening, but the market itself. But specifically on the halvening, we obviously knew it was coming. We've dealt with it before. We've dealt with what they call crypto winters, which happened in between the halvenings. We have a strategy for it, and I'll let Stephen say a few words about our strategy.
Sure. And one thing I'll mention is Sheldon and I have been through the halvenings going back to 2020 and 2016. And at least the community back then called it the halvening. We've seen this shift to halving. And since we've been around a while, we kind of fall back to what it was in the quote unquote old days. So our strategy in terms of us navigating this really was twofold. And we have an investor deck on our website that has a couple slides that shows both the growth in hash rate, since each amount of compute is going to generate less Bitcoin, we need to grow the amount of hash rate or compute power that we have. Late last year, we purchased approximately an exahash worth of Bitcoin mining, and that essentially is going to double the capacity that we have. And so when the block subsidy is cut in half, this effectively offsets that. Now, of course, it utilizes more energy to be able to power a doubling of compute. So we're doing something else. We're running these miners in the most efficient mode. So we could get 2 exahash out of this equipment. We're actually running it so we can run effectively the amount of energy per the amount of compute, usually talked about as joules per terahash. We kind of think of it as megawatts per exahash. We have been the last couple quarters, at 28.4. And we just put out a press release this week that when we fully installed the new equipment, which we just started to install last week, that should reduce the amount of energy to 23 megawatts per exahash. And so that's a pretty significant drop in terms of the amount of energy. So if you're at 28.4, that's now 23 megawatts, but we're growing it. So clearly we're going to go to something like 40 megawatts, but it helps offset in terms of the energy requirement and the cost to mine a Bitcoin. The other thing is the dynamic that we expect that other Bitcoin miners are going to pursue a similar strategy. There's this idea that just a bunch of people are going to just flip the switch off on the day of the halvening, but it's not so simple. People do have power purchase agreements. People do have commitments where they can't necessarily turn off. But one of the things we did was to utilize software to put our miners into a more efficient mode. And we think the community at large, given that the predominant miner out there is the S19j Pro and derivatives of that from Bitmain, it's probably comprises more than half the fleet. And the efficiency can be brought down to the 25 joules per terahash range by giving up some hash rate, maybe 15% hash rate to get a 20% plus reduction in power. And if that's done for a good chunk of the network, plus older equipment being turned off, we've seen analyst estimates of the network hash rate going down by 15%. We hope that we see that over the next few difficulty changes, which happen approximately every 2 weeks. And the combination of those, we hope, will put us in a position where we are still generating material revenue post-halvening, just given these dynamics. Of course, all is dependent on the price of Bitcoin. We do not predict the price of Bitcoin. We will not do it on this show. The network difficulty is just dynamic. We just think short term will happen. Longer term, our predictions there have been off. But we think this is a short term dynamic that is likely to happen just because of the plain economics.
Us going into looking at our last quarter, we had a positive net quarter and a strong balance sheet. A lot of companies, in our peer group of Bitcoin miners are struggling to have positive quarters. So we feel quite confident that, the amount of, cash we have on reserve, Bitcoin we have on reserve, our asset base, and the fact that we've optimized our fleet using predominantly software, as well as bringing in, the latest new technology to double our fleet size, all puts us in a very strong position going into this halvening. So, most companies are still kind of scrambling, trying to figure out what they're going to do. But we've really spent a lot of time trying to figure out our strategy and ensuring that we're in a strong position for what could be many months, and who knows how many months of a hard time for Bitcoin miners with the price of Bitcoin where it is now.
Well, Stephen alluded to this, and you did just now briefly as well. You also develop software and related services. That's what is called Core Plus, as I referred to in the opening. How does that relate to Bitcoin mining? And how do you expect to create a longer term value from those activities?
That's a great question as well. Our vision is a little bit different. We're not a pure Bitcoin miner that you would traditionally see in our peer group. We, early on, when the company was founded back in 2016 and we went public in 2018, we took a view that to build a Bitcoin is quite easy. I mean, you just need energy, as Stephen said, and in the servers, and you turn enough on, and eventually you get Bitcoin out of it. But we saw that a little bit differently, because once you've created a Bitcoin, it sits on your balance sheet, or you have to sell it for cash to run your operations, and you're sort of done. So most miners that are pure Bitcoin miners, they just basically create Bitcoin and they sell it at some point in time to run their operation. We looked at it and said, well, we've kind of done half of our job if we just create a Bitcoin and sell it. There's a whole network out there of Bitcoin transactions happening. And it was our point of view that there was just as much money and potentially more money, for our company and our shareholders if we were to monetize those Bitcoin transactions. Normally, you see that in exchanges, they charge some fees. You see that in different products around Bitcoin. So we really looked at that and said, well, if we already understand how to make a Bitcoin and how to make it very efficiently and low cost, and we can monetize that through our company, why aren't we using that same understanding of Bitcoin to get into the transactional side of Bitcoin? And so we started working on different software products that we had purchased when we went public, when we bought a company called Blockseer. We started developing them. We've developed quite a few projects over time and have been bringing it together and to create an ecosystem that we call Core Plus. And maybe let Stephen say a few words about Core Plus on the technical side.
Sure. Thank you, Sheldon. So we really think of, in terms of this, our Core Plus strategy, is it builds directly on top of core. So to answer your question specifically about how does that relate to Bitcoin mining, we really see Bitcoin mining as a base layer, and we have an in-between layer of Bitcoin software infrastructure. And that includes, first of all, mine management software. So many companies just license third-party tools. We actually have our own homegrown tool. And longer term, our vision is to offer this to others. But it's not just offering to others just as a standalone tool for Bitcoin mining. It's in conjunction with the world's first carbon neutral pool that we created, TerraPool. So everything we're doing is about not just monetizing Bitcoin transactions, but it's creating an ecosystem that gives financial institutions the option to send Bitcoin in a way that doesn't add carbon when they send the Bitcoin, and is done in a compliant way where their transactions are not commingling with bad actors. So we have additional technologies in addition to a pool, which creates a supply of blocks that can be filled with these transactions from financial institutions, as well as ordinals. And we have a technology called Petra that inserts the transactions. We have another technology called Wallet Score that screens out the bad actors that are related to the OFAC blacklist, the Office of Foreign Assets Control. And we have additional technologies for just moving Bitcoin from our pool to the pool users. So we have this suite of technologies that's this infrastructure layer. And then on top of it, we realized Sheldon and I went through a lot of trial and error and realized that if we want to give financial institutions the option to move Bitcoin through our pool, which gives them these benefits of carbon neutrality and not commingling with bad actors, they're going to need a custodian to be able to hold their Bitcoin. So we created, with bringing in Lawrence Trong, Systemic Trust, which our goal is to be Canada's second qualified custodian. Lawrence was the Chief Compliance Officer at Canada's first and only qualified custodian for digital assets. And Lawrence was also CEO of Finance Canada. So he has a great network. He understands the regulators and who they are. He understands the customers and who they are. And he knows the infrastructure and how to build what is necessary to support this vision to have a qualified custodian service the financial institutions. And so we needed all these pieces and then we have an investment in Bosonic, which is an exchange that we hope can help accelerate Lawrence's strategy for systemic trust. And Bosonic, in terms of exchanges, over time we'll have relationships with many exchanges. Bosonic has particular advanced technology that supports essentially custodians being able to trade with each other without counterparty risk. And that was the reason we initially invested in them, is their unique capability. All of those combined enable us to realize this vision. And it's all built on top of Bitcoin mining. So it's all related. So that's why even the nomenclature, Core and Core Plus, it really starts with Bitcoin mining, and to be able to build pool software, to be able to build mine control software, to be able to build the Petra technology to add transactions to blocks. We also, with Petra, we're able to circumvent the protocol limit of 400 kilobytes for the size of a transaction. So DMG has placed the largest ordinals onto the Bitcoin blockchain. We are indeed very excited about this these suite of technologies and how they interplay and what the potential is for DMG.
Well, a lot of what you just covered it points to the answer for the next question. But Bitcoin mining appears to be a business of scale. So how does DMG survive in an environment with much more sizable movers in that sector, bigger miners? I mean, you covered a lot of that, but what do you think is kind of the core to your survival in comparison to bigger miners?
Yeah, and we've always said we don't necessarily want to be the largest miner, but Bitcoin mining is still fundamental. So we have to have enough scale to be relevant, to be able to create the other pieces of our strategy, to be able to fully bring them out. We feel the kind of pricing that we get on equipment relative to our larger peers of 10x the size is very similar. So we don't feel necessarily from an equipment cost we're disadvantaged. From an actual deployment of electrical infrastructure, we feel we've done a much better job than many of our peers because we understand the supply chain and how to be able to buy the transformers and the wires. These aren't just little wires that you would get at a hardware store. These are just massively thick wires that are used for distribution power. There's huge amounts, hundreds and thousands of amps going through it. We've built our own substation and done that much less expensively than and much faster than if we went through utility. And if we look going forward, the pockets of low cost energy are likely to be of smaller scale. Now, there, of course, will be large scale new energy sites. Often those are in countries where there's geopolitical risk, which we will not venture into. We're in Canada for the time being. We're going to stay in Canada. We may consider the US at some point. But when we look at where cheap electricity, low cost electricity at scale, now you have to compete with big AI farms. And if you think about the Bitcoin network as about 20 gigawatts, just kind of can do the back of the envelope and look at the size of the network and the efficiency of the network fleet, and it's approximately 20. You look at what NVIDIA's data center revenues, you look at 50 billion plus a year that they're at, and $5 million a megawatt, you start looking a few years out, it's tens of gigawatts. You can do the simple back of the envelope math to see that AI is going to compete for energy, and kind of given the returns that AI has right now, it's going to take away a lot of those large sites that these Bitcoin miners at scale would be attracted to or would want to go, and now they're going to have to pay a lot more. For us, we look at it and say we can find smaller areas that are low cost. We announced that we are developing a site outside of British Columbia that's hydro-based in Canada. And one of the attractions is the opportunity to potentially have significantly lower cost of power. But there are, all of these things are complicated to find. It's just going to be more complicated if you want to find a gigawatt site with 3-cent US power. We feel those days are, if they're not over, they're ending.
You just alluded to this, and let's go into this now. A number of Bitcoin miners are discussing deploying AI as part of their future expansion. So, reframe your DMG's position on AI and what the near term and long term looks like for you.
Well, I think in the near term, we're going to experiment, and we need to stick to what we are good at. which is Bitcoin mining and really building the software that goes on top of it. For us, that is the long-term opportunity. We look at our electrical power assets as the fact that electrons don't care, and we know how to do Bitcoin mining really well, but we can learn how to do AI over time. The thing that's beautiful about Bitcoin network is your customer is the protocol. There is no in terms of having a sales force and things like that, there is none of that. With AI, it's very different. So that whole piece needs to be created. There are third parties that are trying to essentially act as distributors that allow Bitcoin miners to effectively sell flops instead of hashes to a third party, and to be able to get money back for providing those compute services. Those are still nascent. The market is still young. There's just a lot of potential ways. One of the ways that may be something that caters to a Bitcoin miner are new types of digital currencies that are based on a proof of work algorithm that utilizes GPUs for performing AI type operations. And so that's also a way of being able to get into the market that kind of leverages what we already know. But longer term, it's just like Bitcoin mining was kind of started fairly small, but has matured dramatically over the years. We're going to see AI do that. There already are big consumers of those GPUs. So it's a different business. We're going to be careful, but it certainly plays to our strengths.
Sheldon, would you like to follow up on the AI question?
Yeah, just a few comments following up on what Steven said. From my point of view as the CEO, all I do when I look at our data center and the infrastructure we put in place is I look at, what is the ROI of AI? Is it going to be there in the future? Obviously, it looks like it's going to have a long, long future. It was the same with cryptocurrency. We looked at many different coins, not just Bitcoin. We looked at Ethereum. We looked at all sorts of altcoins. And we looked at white papers and we said, well, we have investor money. We have an obligation to make decisions that are in the best interest of our investors and that take a certain level of risk, but not too much risk for their investment. And every time we looked at things, it always came back to Bitcoin. It was the largest, it was the most stable, the most trading was happening on it. So it had a lot of liquidity. There were a lot of coins promising all sorts of things, but at the end of the day, there were people in behind them that could control them and manipulate them. Not every coin, but lots of them. When we looked at GPU mining, there was a risk around the largest, which was Ethereum going to proof of stake instead of using proof of work, which would have a large investment in GPUs that may or may not be able to be profitable after that change happened. So when we looked at it before the change, we really just focused in on Bitcoin. And chose that and went after that. Looking at AI, it's the same type of thing. We would be looking at the ROI on the equipment. The chips are quite expensive. Bitcoin mining equipment is not cheap either. And we would be looking at, for our investors, for our ROI, what does that look like? What do we have to put in place? What's our infrastructural cost to make any adjustments that we have in our data center? And we'd really just look at it from the point of view, with crypto, we're basically creating hashing. Right. And we're selling that hashing off and we're getting Bitcoin in return for that we turn into cash or do what we do with it. In AI, we're doing teraflops and we're creating those teraflops and we're selling them off and, getting rewarded for that. For us, it really makes no difference. It's just the financial model and the future of what we invest our capital in and how we can get a return to our shareholders. And that's all we really think about. And there's some complexity in everything we do. It's our job to figure that complexity out and ensure that our investors are well protected. And, we explain any risks that we take on and try and minimize our risks. We have a board of directors that ask us lots of questions about risk. So, we think that the decisions that we do make are quite sound. And we think that the fact that we've been doing this for a decade, AI is a bit new, but the fact that we've been running a data center specific to crypto, but can do anything, really helps us in making our decisions.
I know we said we weren't going to speculate on the price of Bitcoin, but historically, Bitcoin miners have done well in post-halvening cycles with concurrent rises in the Bitcoin price. So if Bitcoin pricing were to take off in this period, how are you in position to take advantage of that change?
I think Steve and I both want to answer that, but the one thing that we've done during the last downturn, so the last what they call crypto winter, is we've actually hodled a lot of Bitcoin. Technically, we're not a hodler. This is not something that is our model of business. But during the last downturn, we were hodled ourselves up around 450 to 500 coins of additional asset that we just didn't need to sell. So we put that on our balance sheet. We didn't need to sell it off at $16,000 to $35,000 a coin. We've kept those coins with the idea that we would liquidate them during an uptake in Bitcoin price. We did liquidate quite a few at the 65 to 72,000. We see ourselves following that strategy. Right now, Bitcoin price has gone lower than we expected, or lower than it. I mean, we can't tell what's going to happen. Still, at the point it's at, we're still profitable, which is good. But when there's another uptake, we will be looking at liquidating more of our Bitcoin. We don't see, moving forward in the future, holding a large Bitcoin balance is as positive as it used to be in the past, and that's mainly because of the new ETFs that have come out. So investors that wanted access just to Bitcoin, an ETF is a way to do that. In the past, a lot of investors went to Bitcoin stocks, like Bitcoin mining stocks. The market's changing for us, which is, I think, good. People are really looking at the value of Bitcoin, like the valuable Bitcoin miners, and the ones that have a lot of upside from the fact that now, if you just want exposure to Bitcoin, you can buy an ETF. We think that a good Bitcoin miner is more valuable, and the stock, it will appreciate more than the Bitcoin value that would come through an ETF. But our point of view right now is to focus on using our assets to build growth in the company and to expand the company's operations.
Yeah, just to add to that is just we've talked about raising additional capital. We've talked about potentially raising additional debt. We've talked about raising additional equity, but being very careful so as not to cause just dilution on the similar to way our peers have done, but rather, which is a lot more than our board would allow us to do, but to do modest, very modest raises that help us raise capital, we deploy that capital, that generates returns that we hope will drive our share price, that in turn allows us to raise more capital. So we were looking more at a strategy that will allow us to ratchet up. If Bitcoin pricing really takes off, it gives us more headroom on that we could potentially raise a larger amount of money. We've talked about that when we convert our building that supports 36 megawatts to immersion cooling capacity, that will get us to approximately 3 exahash at our Christina Lake site. That's a way of being able to deploy that capital and drive growth. And that's something that can happen fairly quickly. If Bitcoin pricing is really taking off, we can utilize that capital more expeditiously for growth. Additionally, with another site, we haven't said what the size of that site is, but it would allow us as a company to grow to more than 3 exahash. And we will need capital to support systemic trust and other initiatives that we can accelerate all of those things in an environment where Bitcoin pricing is going up. This is still our plan of record. The issue is just how much can we accelerate it, and the fact that we have a strategy that we can essentially tailor to the way the market is responding will allow us to still do well in an environment. Let's say Bitcoin pricing doesn't rise from here. We can still work in that environment. And if it does, then we can accelerate our plans.
I want to be mindful of your time. We've covered a lot of great ground today, and I really appreciate you speaking with me on the show. My last question today, you've just announced a collaboration with PayPal. So tell us more about what that's about and how that arrangement could develop over time, if you would, please.
Yeah, PayPal is an interesting collaboration. We're not right now exactly sure where it's going to go, but I think just for your viewers, some of the key things to understand. I'll let Steven talk about it because he's been behind the PayPal project quite deeply. Is our interactions with PayPal and our talking with PayPal had a lot to do with TerraPool and us having this pool that runs on renewable energy. And PayPal itself, with its corporate policies, we're trying to figure out, in their world of moving crypto around, Bitcoin specifically, how can they interact in a renewable energy way? And add on to that the fact that we have a lot of products like Petra and Clean Block Mining and WalletScore that are based on working with Bitcoin Core coding, like the technology that makes Bitcoin work. We have a lot of experience in that. I think PayPal found us to be a natural partner that can really help them achieve some of their goals. And for us, as a pioneer in putting together renewable energy as an option for people that are interested in that, for miners and organizations that want renewable energy around their transactions, we were quite happy to work with PayPal because a lot of what they're trying to do is in line with parts of our strategy. And I don't know, Steve, if you want to add a few comments.
Yeah, I mean, the collaboration with PayPal was great, or has been great so far. We'll see, as Sheldon said, we'll see where it goes. But for the paper that they published, the work that we did was it was very collaborative, and we both have the same goal: decarbonize the Bitcoin blockchain. It's an alternative. The best way to think about the PayPal method for sending transactions and targeting carbon neutral miners, it's complementary to what we're already doing with our Petra technology. So we looked at it and said, oh, this is great. This can help accelerate decarbonization. It's alternative. It has the muscle of a company like PayPal. It has Energy Web behind it as well. And what Energy Web potentially creates is certification of who is a carbon neutral miner, and obviates this concern we have about greenwashing, and really says, no, it has a stamp of approval from a third party that says it's now certified as to be carbon neutral. And growing this, having certification in this whole process of decarbonization is going to be really important. As much as we have good intentions, we're not perfect, and having third parties to be able to audit other miners who are claiming to be carbon neutral, for us that's something we want. And the fact that Energy Web and others have really taken a lead in this respect, for us is great, because rather than us trying to have to create our own certification, there's now a development of third parties doing this. So we look at this as just this can really accelerate overall what we're trying to do. And it also makes being a member of TerraPool more attractive, because you're on a pool that is providing an additional premium essentially for placing carbon neutral transactions onto the Bitcoin blockchain. And ultimately, that's what we want to do, is to drive this decarbonization based on economics, not government mandates.
Yeah, I don't know if that really gets through in the press release we did in the paper, but the idea of PayPal is that if you are certified green, and working with them under their umbrella of their transactions, they're actually sending an extra fee in Bitcoin to people that are a part of their system. And so right now, if you're on a pool and you get your share for your hash rate, with working with PayPal, you would actually get extra Bitcoin sent to you because you're compliant as a carbon neutral miner. And so it's like you're getting paid for being green. And that's an important concept because being green, depending on where you are, is not easy. A lot of companies, especially in the US, but even in Canada, it happens based on the amount of renewable energy that's out there. They have to pay for RECs to be able to meet their green targets. So some of our good friends, if you look at Argo, who started Terra Pool with us, in order to meet their sustainability guidelines, they have to go out and purchase RECs. But by doing that and becoming 100% green, if they participate with PayPal, they actually get paid extra payments, and it helps to offset that cost of being green. And there is a real cost for many companies to be, fully carbon neutral.
Well, in the words of the immortal Kermit the Frog, it's not easy being green.
Yes.
Gentlemen, thanks so much for taking the time to join me today. Anybody who wants to get in touch with you directly or learn more about the company, what's the best way to do that?
On our website, there's a contact form. Contact us there. All of that is read and gone through. The good, the bad, the ugly. We have all sorts of comments coming in. Some of them we don't understand. We have to find a translating software to figure out some of them, but they all get to us. So it's either investors at DMG Blockchain or info at DMG Blockchain.
Fantastic. My guests today have been the CEO, Sheldon Bennett, and the COO, Steve Eliscu of DMG Blockchain Solutions, Inc. DMG Blockchain Solutions, Inc. trades on the Canadian Venture Exchange under the ticker symbol DMGI. And for more information on the company, you can visit them online at dmgblockchain.com. Gentlemen, thanks so much for joining me today. I look forward to having you back with us again for another report very soon.
Thank you.
Thank you again, Matthew. Take care.
Thank you for listening to the MarketGems Podcast, presented by the Chesapeake Group, who is solely responsible for this content. Chesapeake Group encourages you to do your due diligence and invest wisely.